Welcome to another episode of Simplified. My name is Fred Martinez, and today we're really going to get into some good Mark Kohler stuff. So let's get started. Why pay your kids through your business? I mean, hey, you could give your kids the money, right? And just tell them, oh, here, go buy this, do this. But the problem is that when you do that, it's not a tax deduction. Now, if you have kids that are under the age of 18, all right, you should be able to deduct paying them through your company. You can't do it through an S Corp, but you can do it through a Schedule C, LLC, single member LLC, all right? Let's look at what we have here. So you're already buying your kids' stuff. Why not make it into a business write-off? It's going to lower your income, and it's going to lower your tax bill. It'll teach your kids about money, and then it moves the income from your high tax bracket to their tax bracket, which is what? 0. Why? Well, how much can you pay them? You can pay them up to $14,600 a year, right? Which you could pay them $1,216 a month with 0 federal income tax return, because they get a standard, even though they're kids and they earned the income, they can make up to $14,600. And their standard deduction will put them down to 0. So in effect, they have no income tax to be paid. Of course, if you don't deduct it and you have to pay it, then you're paying income tax on that money. The real problem here, for all practical purposes, is the kids need to work. You can't just say, oh, you know what, I'm gonna do this, or I'm gonna have that they did this, or they did this and they did that. No. Let's do it right. All right? So what are the things they can do? They can clean the office or the home workspace. They can file, shredding documents. I just had a conversation with a client, and he was telling me that he has his kids shredding documents. They can model for social media, flyers, or the website. Packing products and orders. Hey, a lot of kids are good at recording, video, editing, or they can help you with data entry or organizing your receipts. So then the next question is, what kind of paperwork do I need? Well, you should have timesheets, work logs, right? Job descriptions. You don't really need W-4 and or a 1099 for them, or a W-9 for the 1099, but you could put it on, that way you have it at least on file. But you got to pay them with a check or a bank transfer, not give it to them in cash. If you have a Schedule C, and let's just say that you have an S Corp, right? Because you can't pay your kids out of the S Corp if you're a 2% owner or more. So that's where we use Mark Kohler's techniques. And so then what we may do is end up making a management company that will then charge the S Corp the services, so that then you can pay your kids out of there and be able to deduct it. But then what can you do with that? Well, then all of a sudden now you can set up for your kids a custodial Roth IRA for tax-free growth. So instead of starting at 18, 19, or 20 when they finally get a job, they can actually start working on their retirement plan the minute that they start making money, because then you're in control. And that way then if they set up a Roth IRA, then that money is earning money on top of money. And remember, we already went through that when we went through the Rule of 72 and the vehicles and all these other episodes that we've been following Mark Kohler's techniques on. So what can the kids do with their earnings, right? They can save for college or a car. They can start a mini business. They can fund their Roth IRA. They can learn budgeting with a debit card. Earnings, savings, generational wealth. Here's another thing that most people don't do. Set up a mini board of directors. Family style, right? And a lot of people think, well, wait a minute, how can I do that? Well, you can have a board of directors, just like a major company has board of directors. But it doesn't mean that you have to have people that are big bucks and, one of those type of things. You can actually use your spouse, your kids, and your relatives. You can deduct your travel, your meals, Your meeting expenses, encourage buy-in and discussion. Protect with strong documentation, though. So the real question is, if you ever get audited and you say that, you took all these deductions, well, what proof do you have that these board of directors, your family board of directors, is actually doing work for you, or that you're actually doing work with them? You got to have monthly and quarterly meetings. You got to have written agendas and meeting minutes. Save some photos. Save the receipts. Obviously, take notes, right? Discuss real business matter. Because you know what? If you're not documenting it, you didn't do it. Real world example, make it count. The meeting has to be 4 hours and 1 minute to be a deductible day. Discuss your goals, marketing, hiring, deduct travel, meals, lodging with proof, take photos, collect signatures. Minutes make money. Now we go into an IRS audit. What are the things that we suggest? And these are the top 10 things that will help reduce your audit risk. Number 10, avoid round numbers. Oh, what do you mean by that? Well, okay, let's look at it this way. A rent, right? When you pay rent, usually rents are $1,000, $2,000, $5,000 a month or whatever. So those a lot of times may be good for using those numbers, right? But if you have meals and you have $1,000 in meals, that's kind of question. So obviously the computer systems at the IRS are old, but at the same time, they can pick up on that kind of stuff. File an extension. Just like everybody else, the IRS has quota. So they're going to fill up the spots as they start getting information in. And so then we want to go ahead and make sure that, that if we can, file an extension. You can't extend the IRS's patience. You can extend the time that it takes to file, or that, through the extension, but the IRS wants their money on time. A lot of times, you can't avoid a Schedule C or a Schedule E, but Schedule Cs and Schedule E are more prone to get audited. Be honest with auto, home, office use. Don't overdo dining and travel. On number 5, pay your taxes on time, right? We talked about that a little bit earlier, where we want to make sure that by April the 15th, that you owe, because remember, when you file an extension, it's to file your income tax return, not to pay your taxes. Your taxes need to be paid on time. Issue your 1099s. Treat employees like employees. Don't treat employees like 1099s, because then you could have the Texas Workforce Commission or the IRS come in, and then you can get fined and billed for that. File your payroll taxes on time. File on time, even if you can't pay. The IRS is going to charge you whether you pay it or don't pay it. But at the same time, if you file on time, at least you're filing that and you're not getting additional penalties. Respond to IRS letters promptly. Remember, pigs get fat and hogs get slaughtered. So I finally became a Main Street certified tax professional. All right. So I follow Mark Kohler's techniques and stuff. You know what? It's time for you guys to book something with me so that we can go through and we can try to see how we can save you taxes. You don't pay for the hour. You pay for what we discovered together. So let's go through this journey and let's go ahead and get you set up, going, and let's try to reduce your overall tax liability. Once again, I want to thank you for another episode, listening to another episode of Simplified. We'll see you next week.